Everybody loves yelling 3 to 1, 3 to 1, like it's a trading commandment or something. But the perfect risk reward ratio might be something totally different for you. Today, we're going to break down how your style, your account size, and whether you trade stocks or options should change the math. So you stop forcing trades and start building a ratio that actually fits and works for you. Create a risk reward ratio that matches your trading, your setups, your psychology, and your account. Let's get into it.
Welcome to Beyond the Trade, where the levels don't lie, the trades hit hard, and we're here to cut through the noise. No scripts, no safety nets, just raw market talk. Lock in. It's time to go Beyond the Trade.
Beyond the Trade is for educational entertainment purposes only. Nothing you hear should be taken as financial advice. Always do your own research and consult a qualified professional before making investment decisions.
Mike, how we doing?
Brother, what's going on?
It is just a little bit before the Bears game, a few hours, so we're getting it in early. Go Bears.
Go Bears. Go Bears. It's good to hear your voice, my friend. We haven't talked since last Sunday.
I know. Well, I don't want to go too much into detail about all of the shenanigans that have happened as soon as the market closed on Friday with the Nvidia chips, and then the tariff doings, which is just so exciting to me. As you can tell, I'm elated in my voice.
Yeah.
Want to make sure I'm emphasizing that. I'm not thrilled. First of all, I want, for those who aren't aware, there's been a constant back and forth between the Nvidia H200, is it 200 or 2000? I forget, chips, and they got to China, and then China did not accept them, and it's basically the dumbed down AI chips. They did not accept them, and so I guess now suppliers of Nvidia are kind of having to stop or hold back their commitments. We're going to see how this evolves. And of course, this is not a new story. This has been happening. It went from Nvidia was thinking they were going to assuming they was going to sell none to China. And then some people thought they were going to sell millions of units. And then now it's back to none. So Nvidia did bake this into their guidance for the past couple of earnings. So I'm taking those kind of stories with a grain of salt, and they'll change overnight. But one that I did not expect is us putting tariffs on the EU. 8 different. Okay.
Yeah, I see. You were when you messaged me
Greenland
about that. I had not seen it at that point, I guess, and I'm looking at it going, okay, whatever. It's it's another. I guess my attitude's a little different because I am an options trader and I'm holding nothing at this point as far as carryovers from last week, which is one of the beauties of being an option trader, right? I don't have any commons that I'm worried about out there. However, when you brought that up, I did start looking at it, and I don't know. It's and again, I am no expert by any means, but they say that the first indicator you should be looking at come Monday morning is the VIX and how it reacts, and will tell you what the market's actually thinking about this whole thing, whether it's just fluff, doesn't care, writes it off, or sees it as a major concern. So I learned something from you messaging me about it and seemed pretty upset. And I'm but again, how many times has Trump done this? And 2 days later, okay, tariffs are off again. Taco.
And yeah, that is exactly what. And this is a long weekend. Right, with MLK Day.
Yeah.
I think we have re-entered because the market is really in a range, and this is kind of a testament to how it is range trading is difficult. And if any of you recall, go back to the NASDAQ, and I have talked about this for weeks. Mike, I've talked about this for weeks, and I actually just removed the circle from it. But you go back, and I've talked about this for weeks, and you go look back to this, and these don't. They don't look fully unalike. I'm being vague there, but you go back and you look at, for those listening, not watching, you go back and look at February of 2025, and it kind of builds this wedge that looks like it's about to just eke higher over about 540 area on QQQ, and then all the tariff talk starts happening. I mean, it ran up into Trump's election and inauguration, and then as soon as that happened, really everything started to just head downhill and started selling on accelerated volume. Okay, well, we've seen elevated volume in the past three. I'm looking at a 4-day, because it's something that's helpful for me, and I don't know many people who do this, but I add 1 day, 2 day, 3 day, 4 day, 5 day, 6 day, 7 day as increments for my charts, because I think if you're just looking at daily chart and then weekly chart, you're not seeing the full picture. But as being the devil's advocate, I will say that if you want to find a chart pattern, you can pretty much find it anywhere. So
exactly.
If you're looking for a inverse head and shoulders, if you check every single time frame available, you will find it. You know, so don't use the chart to support your thesis that you already have. Use the chart resources to build your thesis.
Well, I think it's important too to set your chart lengths on as far as time frame into like events that are going on. So okay, you could say, well, what's an event? Well, the election was an event. So start with, you know, the election and look for patterns there maybe, or a tariff announcement. Look at you know, you got to break it down, because you could look at, well, I'm on a 5-year chart and it's showing a massive head and shoulders. This thing's about ready to rip. Okay, you might want to back that out, and because that's data that is no longer relevant. It's not influencing the charts in any way. You need to be looking at them, in my opinion anyway, on more current events, basically.
Right. Yeah. I mean, and us threatening 10% tariffs imminent on February 1st, and then going up to 25% on 8 of our biggest allies in the EU, if they don't make us a deal to buy Greenland, then that just doesn't bode well for anyone. I don't expect, unless the news changes, which it very easily can, that, you know, we're range bound right now. And
I think it's already changed from today. What I saw was, you know, there was all this talk about, well, all these European forces are now being sent. Well, they sent like 10, 20 guys from Germany, a couple guys from Switzerland, and they claimed that it was there for some sort of training episode that they were doing, and they left today. They've already left. So, but the media will try to plump that into something that it's really not, is what I'm getting at. And I think this was if you want to play games, we'll play games, throw out the tariff. And I honestly don't think that anything there is going to really stick. And then I'm thinking, okay, I'm looking at those countries going, yeah, we do import a lot, but they're not the only supplier. So, and I'm on the other side of this as a guy that does import product for my business, and I have zero concern for my product coming out of Europe with what happened Friday. So that's why I guess I'm downplaying it. I don't see it being that big of a deal. You get it from a different end. You're looking at it more from, you know, you as a guy that's buying commons, and you've got some invested interest in the stocks that you hold. I'm looking at it going, all right, well, it'll change again next week. We should be used to that by now, but maybe not. Maybe so.
Yeah, I don't feel great about the way that tech stocks are really selling. And there's so much, I mean, there's just a lot of, the news cycle has just been really crazy this week and over the weekend. And also, you know,
the whole AI thing with Elon's lawsuit against OpenAI. And
yes, before we move on from tariffs, though, I do want to say we're still awaiting a Supreme Court ruling, which they say we may get part of the ruling on Tuesday. So, I mean, this is just crazy. This is just crazy. So anyways, it's all going to be, we're back in the news this, news that. We could easily end up 3% on Tuesday, right? It's just, I'm telling you, it's all the news. And boom, here you are, okay? OpenAI, they release they're going to release ads on ChatGPT now as of last week. Of course, a couple stocks moved up off of that. Anyone who's tied to OpenAI, which is Microsoft, obviously,
That's a big
Oracle,
one.
because they do all their data centers. But then Elon Musk was granted his lawsuit or whatever, a court date in April against them, and some of the evidence on both against OpenAI is, of course,
Yeah.
this is all hearsay because it's all on Twitter, but some of it is not the best look for OpenAI, and he's suing them for $136 billion.
Yeah.
So
and I think they have the odds on that at like 68% right now that he'll win.
yeah,
Go figure.
And this is why it's times like these when and the presidential election last year when these prediction markets can actually be really interesting data points. So yeah,
I think there's crazy stuff that hasn't come out yet. I really do. There's an interview, and if anybody wants to look, and you can call me a conspiracy theorist, I don't know. It's just the vibe I get from this whole video. Tucker Carlson interviewed Altman after one of his key programmers was found dead. And when he flat out asks him, so what do you think about him being murdered? He goes, well, it wasn't murder, it was suicide. And Carson pulls back and he goes, what are you talking about? He goes, there was blood in multiple rooms. They found a wig. The guy just ordered DoorDash. He goes, yeah, it was ruled a suicide. And I feel a little offended. I feel like you're accusing me. And the look on Altman's face at that point was like, I'm sitting there going, my God, the man is guilty.
Wow.
It's a crazy thing, but I honestly believe there's so much money wrapped up in this AI thing. Well, they're saying something like $20 trillion in the next 10 years. Some ridiculous number. I'm like, okay, when money of that size gets involved, weird stuff seems to happen.
Well, which also makes you think that Elon is going to lose this, but But
I'm almost thinking Elon knows something.
He totally does.
He's got something in his back pocket, and they know he does. Be careful, Elon, if you're listening. That's all I got to say about that. Well, I hear he might listen on occasion. I don't know.
Yeah,
Rumor, but not confirmed.
I go visit him occasionally and just say what's up. Anyways, all right, to the subject matter.
But again, but what you're talking about is, so you were all kind of hyped up and going, oh my God, what the heck's going on with these tariffs? I start doing more research over the weekend on AI stuff, and I find things that get me more excited than concerned. But we'll get into that a little bit later in what we, I guess, go into our risk reward portion. Sorry, it took us this 12 and a half minutes to get to it, but we kind of been talking about it a little bit, I think, over multiple episodes about maybe doing something on risk reward. And I think this one will just touch on it. And it's probably something we can look into a little deeper down the road. But, kind of as we said in the opening, everybody says 3-to-1 risk reward. Don't enter a trade unless you can establish a 3-to-1. And the longer I've been in this, the more I think that is not necessarily the case. There's nothing wrong with a 1-to-1 risk reward, especially for retail traders who are maybe a little less seasoned. And how many 1-to-1? I mean, you want to risk 100 to make 100, and if you can do that 7 out of 10 times, those are pretty good results. Versus a 3-to-1, how many times can you look and if anybody doesn't use risk reward, there's a very simple tool, especially on TradingView. You can do a short or a long risk reward and pull up the long. Yep. So wherever you set it, it starts. Now that's a 1-to-1, so you can drag right to your level that you're saying, okay, this is my bottom. If it gets there, I'm out, and this is where it has to get to before I get out with all my profit. My question is why? Okay. I have developed a little different program where I look at percentages and how far I'm up, but again, I'm trading options, so this is a little hard to do on options unless you have an actual options chart up that's giving you pricing, but it still doesn't take in decay or anything else, right? So on commons, this becomes very simple in a way that, okay, I'm going to risk whatever your risk tolerance is, $300 to make $900. Well, why would you not get out at $500 if you know what I mean? I think the 3-to-1 gets overplayed a lot, and I'd much rather be the guy that gets 7 out of 10, 6 out of 10, 1-to-1s, or loses 2, 3 in a row, 3-to-1s because I let it close out. It never hit my number. It becomes psychological at some point where you start doubting yourself. Take the easy wins. Never let a red or a green trade go red. I don't know. I have a lot of thoughts on risk reward after looking into it here the last couple of days, knowing that we were doing this. It's changed my opinion a lot. What's your thought?
Yeah, I know that we voiced this in the recent past, and for me, risk to reward popped up in an episode when I talked about CoreWeave. Wait, that's all of them. We should play a drinking game where
there it is. Every time Adam mentions CoreWeave, take a shot.
We'd have a lot of drunk listeners. Yeah, CoreWeave or Tesla, which we've already mentioned, or the Bears or Elon. Anyways, but I did mention it on CoreWeave specifically because I mentioned a few weeks ago that I had a $70 average. Okay, and that was on December 19th. Did I? Yeah, it was the episode on December 21st, because on December 19th I grabbed an average of $70 on CoreWeave, and I said, okay, my risk here, which would invalidate my thesis, that is, this is going to form an inverse head and shoulders, and it's not going to go, CoreWeave is not going to go below 65.25, which would be the left shoulder of this inverse head and shoulders. That's just my thesis, right? My thesis could be totally wrong. But the goal is to have your totally wrong thesis loss a lot less than your right thesis right.
Exactly.
And so I would have even given myself a tiny bit of grace period, and I would have even kind of marked it down to below the head, which is the low of 63.80. I mean, because they may, in my head, I'm saying, okay, maybe they throw it below 63.80 to just grab that, to be that mop up candle, grab the liquidity in air quotes, and be where they, bring it down there just to stop everybody out, make them sell because they say, oh my gosh, it's below the most recent low, and then whip it back up, which is I thought was totally possible, and I'm pretty sure I voiced that. So I would move it, and not just 1 cent below, right? This is all part of R&R. It's not rest and relaxation, but you need that too.
I'd add that I do think risk and reward is important. So don't get me wrong from what I said before, but I think when you know you want to enter a trade, if you're basing it on support resistance levels, fine, and you see the point, okay, it hit this, I'm getting in, get in, and immediately turn on this. If you're using TradingView, if you're going long, the long risk reward, and play with it. Move it where your entry was. The white line between the green and the red becomes your entry, and drop the red down to 1 and move your green to 1 and see where that level lines up. Does it line up right at support? Well, if it does, then I would say that's a pretty good 1-to-1 play. If you're if you're willing to risk 100, 200, 300, 500, 1,000, whatever, you've got another level up there that's giving you, and if it varies from that, there's your first signal to maybe this wasn't the right time to get in, and go ahead and close the trade out before you get beat up too far. I don't know. I'm learning a lot about risk reward here in the last couple of days of looking at this, because I never really put much thought into it. I've used it, and I use it on occasion, but again, with options, it's way different. But I definitely see a huge value in using it on commons for sure.
Yeah, and I almost like to present any investment that I'm making or that I'm, you know, bringing up in any public setting, like I'm presenting it to, a committee, right? I need to support this rationale. So
Right.
I'd say worst case scenario is, okay, you on paper, an 11% drop is kind of a big number, which you also have to understand what you're trading, right? Even if it's commons,
Yes.
a lot of them are going to be a lot more volatile. Like I know that CoreWeave is volatile. This thing can go up 30% in one day. So you have to know the personality of the stock, of course. So I know that about this. Like I'm not full porting this and just saying, all right, well, I'll lose 11% of my whole account, because and I'll be okay with that if I lose it, right? That's not the thought here. But what the thought is, okay, my stop like totally, and honestly, I probably would have partial closed some at 65, under 65, probably would partial close. You can also partial stop. I mean, you don't have to be 100% in or 100% out, but under 65, I probably would have sold. But I'm just worst case 62 something. And then my first target was and always had been 90 area, right? The top over here was actually in the 91s. So you look at that, the risk to reward to my first target, which you can see it actually exceeded that on the first attempt. It's 2.6.
Yeah.
And that I would say, and you also have to know,
You can run these multiples. You can put up another one right next to that and go 1-to-1. You can put up another one that goes 2-to-1 and another one that goes 3-to-1. They all stay on your screen.
Just copy paste, right?
Mm-hmm.
And but I don't want those, obviously. But you also have to be realistic. And the best traders, what they do is they wait for the best entries. And I don't get the best entries at times, but I would think that 70 is a pretty gosh darn good spot here, because. Just in this example, because you want to be as close as possible to that worst case scenario, right? That within reason, but you want to be as close as possible to that stop loss. Not that you're like, if you get 3 ticks down, you're out. You got to give yourself a little bit of space. But my first realistic target, where it pretty much just was 4 days prior, was a 2.6 risk to reward. Great. Okay. Well, my second target was 105. Okay. That's a 4 point. That's actually higher. That's a 4.4 ish, and so you can play around with it, but that was a great play. I know some of you took it. Congrats. This really panned out exactly as expected so far. I do think this probably dips back down to 91, but I'll talk about that later. But that's kind of how I think of risk to reward in terms of commons. It's it's fine to play 1-to-1s, but you just have to, that puts you in a scenario where if you're going to be the casino, right, you have to win more than you lose, and there are there are way smarter people and algorithms out there than you.
Mm-hmm.
Contrary to popular belief.
What I think happens, though, from what I've seen and how I've watched some of the chatter on Twitter, and I see all these 3-to-1. It's a 3-to-1 play. It's a 3-to-1 play. But so many people, especially newer traders, take that as, okay, I stay in until it hits my 3. And here you are at 2. You're whatever. You're up. It's $1,000 play, and you were going to risk $100, but all of a sudden you're up $200, and it's coming up to a resistance level. Are you not going to take any profit at that point? I think that's where it gets misconstrued or misunderstood at times. And I think we really should do another episode on this down the road that's a little bit more detailed. I mean, today was just to give an idea of what risk reward is, how to use it, how not to use it. I don't know. It's to me, I see a lot of value in it. Again, It's harder on options because you're looking at, the moving price of a stock, and obviously your options don't move the same. So that's why I don't use it as often.
Well, that's why a lot of people just do percentage terms,
Exactly.
right?
Yeah.
With options, it's like, okay, I'm cutting the entire position at minus 12%, and then on the option, not the underlying, because
Right.
your option would be minus 100% if the underlying went minus 12.
And that's a good
And
point. Do
and
the options on the percentages versus, which is what I do, versus a dollar amount. Or you say,
yeah,
oh, okay, I'll risk $100. Well, why not just risk 10%?
and I think I think the probably the most important thing to talk about when you're thinking about risk to reward is you look at that risk, right? Because a lot of people just look at the potential reward. You look at that risk and you come to terms with that risk, and you already assume that risk before you even take the trade. Are you
Yep.
cool? Are you, and I have to explain this, many times. It's, are you cool with selling this for minus 10% in maybe a day, right? But what you stand to gain is X, right? But you have to know that you're okay with losing, say you're putting $10,000 into something that your stop loss is 3% lower. Like, you have to be okay with losing $300 on that position today or tomorrow. You have to be okay with that. And if you can't come to terms with that, then you need to either lower your size, right? You can lower your size and to where mentally, it's all about kind of that mental test. And I think that's the really most important part to me.
And that's
when it
kind of a
comes.
whole nother episode on talking about how do you size in, size out, what size should you be taking, what's your account size, there's guys, it's so psychology plays such a big part in this. And when the day you realize that makes a big difference.
It's whatever, and just like they all, the old saying, never invest or trade more than you're willing to lose.
Exactly.
And same thing with going into a casino. If I walk into a casino, I understand that I've already lost that money.
Whatever's in my pocket is probably gone.
It is gone. Not probably. It is gone. And so if I have anything from that, I'm like, wow, this is a win. And so a break even is a win. And it honestly, you know what I'm saying? It's great to keep yourself in high spirits.
Yep. And again, just what you said is the reason why sometimes maybe a 1-to-1 is not a bad idea. If you win 4 or 5 in a row and you're putting $400 or $500 in your pocket during the course of a week, is better than going one that was 1-to-3 or 3-to-1 and you're down $800 all of a sudden.
Yeah.
That's when I started watching some of these other videos and really diving into it. It opened my eyes a little bit because I was always one that thought, oh yeah, 3-to-1 that's where you should be. If it's not that, then it's not a good play. Well, that's not necessarily the case, I guess is what I'm saying. Anyway.
Mm-hmm.
Don't get me started.
Well, and I'm looking at another one here that we've talked about. Another example is Baba. One that you played, and you were entering this thing when it was around 148, 150. And so I know it was in options, but let's just, think of as if it were commons, right? We'll enter where Mike entered roughly, which is about 149.60, and I'm gonna put my stop loss lower than. You never know with these stocks, but this 148.40, which is the top of the February to March of 25 range, was was the first immediate support, but I could have easily seen it going down to the top of the February 20th and March 7th candles, which was 145. But then I look at this gap here from March 19th to March 20th, and I say, okay, if it breaks below the low of March 19th, I know it's almost certainly going to fill that gap down to the high from March 20th. So I know, and that's a drop from 142 to 139. So I don't want it to go below 142. We'll just call that my last line of defense, okay? Call that my last line of defense. Under 142, I'm out. Okay, and then my first target was back to the highs from the highs of 165, which was the highs from the December 1st of 25 and November 25th of 25 candles. And so I look at the risk to reward, it's exactly 2.
Yep.
And to me, that's enough for me to take a commons trade. I think I suggested a commons trade here because the options are wild. As you can see, it went up to 155. So this would not have hit. You know,
options were fire 2 weeks ago.
I would not have stopped out either. But like it goes up, you know. You also have to know what you're trading. You have to know that this one's going to be jumpy, and we warned, right? You know, minus 3%. It looked like it was breaking down, right? But you wouldn't have stopped out of this trade because you found the last line of defense, right? It would have been minus 5%. And then went up. Oh, wow, okay, but I'm still not at my take profit yet. Maybe it was a 1-to-1, but you know, I wouldn't have taken profit there.
I guess everybody has different goals too. You know, it's like, well, I have 20 grand sitting in the bank that I'm not using. What should I do with it? Well, depending on who you talk to, they're going to say, well, throw it in the market, throw it into something like SPY, and let it sit there for 3, 4, 5 years. You're probably going to be okay, and you probably will. I mean, based on history, you're going to do great. But it's like, well, I'm looking at a different time frame. So everything we talk about is y'all have to understand it's based on your style of trading. Everybody has their own style, and it may not be the best style, and you will change your style as you learn to ignore some of the noise, I guess, that happens every day, every week, etc. But have that goal and set your risk accordingly to what it is you want to achieve. You know, if you want to be a millionaire, well, by God, good luck, and I wish you well. But regardless of what you may hear and read on X, there's not a lot of millionaires being made from retail traders on a daily basis. It's just not the way it works. I mean, it was all, think back to when COVID started. That's where a lot of people, including myself, really got more active in the market. That era is done. The COVID thing is done. It's not the same. Think about who you were looking at on all these social media sites that were people that you maybe looked up to, followed, or were giving you ideas. A lot of them are gone. They're not gone because they just got tired of it. They got no money. This is not an easy thing, is what I'm saying. It takes a lot of work, a lot of discipline to make money in the stock market. But time is on your side. If you're willing to put money somewhere and just let it sit, historically, you will make money. But we're looking to up those odds a little bit, and I guess that's kind of why we do what we do here on this podcast, is to give you some ideas to maybe put a few extra bucks in your pocket, or instead of losing a trade, win a trade, or take your profit when it's there and not hope for this 3-to-1 ratio thing. I mean, it's great if it worked and it was that easy, but it's not.
Yeah, nothing is really ever black and white. There's a lot of gray area, and there's, like I said, you could scale out half of a losing position. You could scale out half of a winning position, right? There's all you got to find what's comfortable for you. And the thing is the most comfortable thing is just what you learn over time. And no one jumps into trading and immediately knows their skills, strengths, weaknesses, right? It's the market
continuous learning, really.
It's the market tuition. The more you lose, the more you'll eventually win. So lose, baby. That's a joke.
Get it out of the way.
That is a joke.
Are you good with risk reward at this point?
Yeah, I'm good with it. I think, that covers what I wanted to say, and I think it's very important to think about, especially as we might see some tumultuous waters here in the coming days.
I think the next couple of weeks are going to be interesting with just what's out in the news right now. A little bit of a switch here. I started looking at, because of the tariffs and the chips and the AI and all this stuff seems to flow together at some point. I started diving a little bit deeper into a few different things, and I mean, I'm excited for what's coming. I really am. It's now finding those stocks that I want to invest in, and some of them are smaller. So for me, in options, it's like that could be a rough ride because they're not big options plays. But one that came up, and maybe I'm just late to the game. You guys all know of Bloom Energy, BE?
Oh man, is it? Oh, are you saying it's time?
I think it's time. It's time for
Sunday Bangers.
There it is.
All right,
There
so
it
get
is.
going, get going. I'll bring it up. BE Blue.
So,
wow,
BE.
wow.
Yes. Look,
Yeah, I've known about this one.
Okay. So there's I think her name is Beth Kindig. I follow her on Twitter or on X, and she was on. I saw a clip of her with Charles Payne talking about AI, and I thought it was interesting. The interesting fact was, and I wrote this down so I didn't mess up what she had actually said. When it comes to AI revenue, the number one company or stock is Nvidia, right? I mean, no surprise there.
Wow.
Okay. Who do you think is the number two in AI revenue?
I don't know.
Meta.
I was gonna say Broadcom.
Meta.
Okay.
Number two to Nvidia on AI revenue, 60 billion in run rate on AI revenue last year. And Meta is making a switch right now, getting away from the whole metaverse, the goggles, and really investing heavy in AI. And that got me kind of going. But she also mentioned in this whole episode BE, and I think I might have heard of it, never really looked at it. My God, this thing. So I started researching, and I'm not far into it because this came up literally like an hour before we started doing this recording. But I started looking into them, and Bloom Energy does some pretty incredible stuff that I'm pretty hot on this, and it's sitting at all-time highs, and I'm still looking at it. They do solid oxide fuels, so they take basically natural gas without combustion and convert it into electricity in like these, I don't know, the best way to describe it is like pods. They call them servers. And I've got an interesting meeting coming up here this week in our city who has a moratorium on data centers right now because we just don't understand it. We don't know what it's going to do to the power grid. We don't know what it's going to do to the water supply. So that's coming up on a planning commission meeting here next week, is how do we deal with data centers? This to me is such a great solution on the surface to the power grid because it doesn't connect to the power grid. They are doing these things on site, on the property, and producing energy without disturbing the power grid whatsoever. Pretty amazing. I don't understand the wizardry behind it. I'm not going to pretend to be some well-versed scientist on solid core oxide fuels, but this thing got me excited. And I will definitely be keeping an eye on Bloom Energy. Not that this is a Sunday banger, but it's one I just wanted to bring up if people haven't seen it and look at it. Where is it at? This is crazy. It's 542% up in the last year.
Yeah,
It's up 65% year to date. It was up last week, up 22%. This year to date, this month, 70%. This thing is exploding, and from what I've found out, they're
$35 billion market cap.
Yeah, their real niche though is they are like if you're building a data center, their time frame on getting you to be self-sufficient on gas conversion, power, and what they do is 3 months. That's less than the time to build the facility. It's not like building a nuclear reactor on site. This is pretty quick. It's exciting. I thought this is one that I'll definitely be looking at. Keeping an eye on it. Again, this is not a signal to buy by any means, but it's something that I think I would be very aware of. It's pretty cool technology. Their competition is limited as well. So let's move on.
Cool.
Let's bring up. Okay, and so I guess I'm going to kind of to explain this. I don't really have a Sunday banger that's for something that's going to hit this next week. I think we have so much news going on right now and so much uncertainty. But going through all of my charts and the stocks that I follow, these I found to be the ones that stuck out to me. Dell. I'm a huge fan of Dell. Dell is what got me into trading, gosh, almost 40 years ago. I took a bonus check that I'd gotten from work and invested it in Dell back in the 80s. And Dell had a thing, like every time it hit like 125, I think it split. And I got used to that pattern where it would split. I'd keep it for a week, sell it because it would come back down, wait for a month, buy it again, it would go back up. And I did that like a dozen times and made a lot of money on Dell. Dell they're making servers, AI servers. They took a little bit of a hit at CES, I think it was. They announced that they felt they missed the mark on consumer-based AI computers, which is what they were promoting. And the average Joe Blow like me and you are not interested in AI laptops and desktop computers. But they admitted to it. However, it doesn't affect the fact that they sell a lot of server equipment to the AI industry. And they're a well-run company, in my opinion, and they're sitting at a level that's pretty impressive. I think that there's a lot of room in Dell over the next month or two. I have the 117, 118 level is kind of support.
Yep.
141, 142 is maybe resistance.
Yep.
And it's got somewhat of a nice head and shoulders going there. I mean, it's got a little room down, I think, maybe, but this is one I would keep an eye on, I guess.
Yeah, when I look at, I like that. I like this pick.
Yeah. Switch over to Meta. Kind of goes over to the whole BE thing and this Beth Kindig. I don't know her, don't know much about her, but I do get a newsletter from her weekly. That's actually pretty good. She's very well versed in AI. And she has Meta as a buy, but not necessarily buy right now. I think they've laid off a lot of people at Meta. They are starting to cut away from the metaverse and getting a lot more involved in AI. So I think Meta is a little bit of a sleeper right now, and they actually have a nice pullback going. So this is one I'm looking at like 605 as a base. If that doesn't hold down to like 585, I'm kind of waiting for a 585-ish touch to be able to jump in because there's a really nice gap set up there in, was it October? Yeah.
Where? Which?
Right at earnings. They missed earnings and
Oh, yeah, obviously.
big gap down.
Yeah, above above like 680 goes straight up to like 642-ish. That would track, yeah, for sure.
Yeah. Anyway, her talk on how them being the number 2 in AI revenue was like, wow, I would have never imagined that ever. My next one, let's move on to one of my favorites, Boeing.
Wow, I mean, Mike, you are just banging this. I mean, how many bangs are you getting this week?
Boeing. This one scares me a little bit, but they got earnings coming up, and it's a week before earnings. I like Boeing to run up a little bit before earnings. I have 267 as my target. I'm looking at see how it opens on Tuesday. Again, we have a short week, so I would look to see what happens on between Friday and Tuesday. If it's on the upside, I would myself be looking to go long on some calls there.
All right.
Last week I called out Hood. It really didn't do much. I think I had Hood and Apple last week. Apple's kind of a weird one, but
Hood.
Hood, yeah. It kind of hit resistance. It retested the 107. It goes to 107. Yeah. Apple, same thing.
Yeah, I'm gonna Apple. Here's what I see. Maybe like this going up. That 266 level is going to be a big one, and then maybe come back down here to 264, going back up. I don't know.
Apple has a problem right now because of the whole chip thing. They got a chip shortage going on. The tariffs aren't going to help that. I don't know. It started. I called it last week, and I think Monday it had a pretty good day, and then it just nothing. So I was out of those options midweek.
Yeah, this thing has kind of gone straight down.
But it is sitting there. It does have the bottom of that little zone it's in is probably right around 254. And if it breaks through that, then I don't know where it's going. If it bounces from there, then I might get a little bit more interest in it.
Yeah, there's a lot of volume here on Friday.
Mm-hmm.
Lot, and that's not it. Breaking a below support on high volume is what they say no bueno.
No bueno. Then I would go to Palantir.
Wow.
I like where Palantir is sitting right now.
Okay.
I think it's getting some juice and might make a little run here. This is probably my number one watch going into opening on Tuesday.
Really?
Yeah.
Don't say.
There's just, again, maybe I'm just juiced up from all the research I've done on AI over the last couple of days, but it's military, it's AI, it's so many people hate it that makes me like it.
I feel like if you spend like 15 minutes looking at the what people are saying about the future of AI on either YouTube or X or whatever, you're going to spend 7.5 minutes where basically the world is ending and AI is going to kill humans, or AI is absolutely nothing and will never generate $1 of revenue ever and is going to bankrupt the whole country. There is no in between, folks. There is no in between.
I've seen so many things and demos on AI in the last month or two that just blows my mind. I mean, there's a guy that's running a complete marketing company where he walks in the morning and says, Jerry, the name of his AI, create the monthly newsletter. Okay, sir. And it just does it. It's like, to me, it's crazy. Now generate the images for that. He's literally taking a department that would cost him multiple six figures and doing it with an AI thing that he goes, all right, I'm getting ready to go golfing now. Please have this done by the time I get back. And it's done. It's crazy. And we're just, again, we said this before, it'll never be worse than it is right now. It only gets better every single day. It's crazy.
Long live Jerry.
But I digress. Hello, Jerry. Hello, Sal. My last one is something that I got back into at the end of last week. One of my favorites, FNMA, Fannie Mae.
Fannie. Wow.
Interest rates come down a little bit. It's sitting right at my preferred level of 850. It could go to 750, but I think this thing starts taking off. And the IPO is still out there, which is said to be the largest IPO in stock market history. And they're only going to IPO like 10% of it or something ridiculous. Let's go, Donald. Get on it. So what I do on this one, I do not obviously trade options on it. I buy commons, and on dips I add, and then I put them out there. Though sometimes I think I did it a couple times. There's some halfway decent options, so I'll sell covered calls. But right now I'm acquiring on this one, and that's it. That's all I got.
We are acquiring.
We are acquiring.
Mine, I'm not that not that crazy, but I do want to shout out.
I felt I've been lacking in the last few weeks.
No, I love it. I love it. Thank you. I mean that makes my job easier because you just gave so many good picks. But,
and again, not Sunday bangers, but these are because it's going to be hard with a short week to I think these are ones that anyway I'm keeping on high on my list for the next month.
Yeah, perfect.
And we will adjust accordingly.
Perfect. Hey, last time, I mean, you nailed Baba, you nailed a bunch, but of course, a lot of our picks are wrong. A lot of them are right. So we'll see.
And one that we haven't given you the actual stadium applause for your call from last week, CoreWeave.
Last week? Don't you mean the last month?
Well, no, last week, dude, you were vicious about CoreWeave. You gave out the levels. You gave out 30%. What did it do? It was up 30% last week, just under. But I mean, you're close. We'll give you that one.
I'm patting myself on the back.
Pat yourself on the back. That was the GOAT call of the entire Beyond the Trade life existency. You nailed that one last week.
Well, it's because I just get so. If you've listened to my Sunday bangers for the past 3 or 4 weeks, it's been just that stock. Aside from last week, so I mean, I try to be pretty transparent. You know, it's very transparent. It's like when I was in just APLD and CoreWeave, or just NVTS, or and APLD, like. Pretty easy to know what I meant because it's the main one I talk about.
It was so big that I had to actually go in and pull that section out and post it as a separate video on YouTube because you're talking 30. You missed it a little bit. It's 29.25% for the week.
Gosh, oh my,
tighten those numbers up, will you, buddy?
Oh my, I'm working on it. I'll work on the bips. NXT was a good winner. I even said last week. I said, hey, you buy NXT here, and at any point in this consolidation, it's going to go up. I think to the 113 range, and if it breaks out before you get in, just wait for the 95 pullback, which it already did. And actually, that's exactly where it came back. So cool there.
Winner, chicken dinner.
IMOS. I mean, guys and gals. Did you? I mean, okay, you must have, because look at the volume. Look at the volume last week. Look at the volume last week. That is the highest volume candle since since June of 23. Who is listening to this podcast?
All those Beyond the Trade podcast watchers bought into IMOS last week.
Okay, I clicked on IMOS every single day this past week. I didn't buy any, but I clicked on it, and I'm like, okay, Elon, you must actually be watching. This was one of the highest volume weeks in 6 years. So, what?
I told you. Rumor is Elon does listen.
It went up 20%. No, 16. I just did the 6-7 thing. The 16% this past week. Who's listening to this podcast? Granted, it really doesn't take much. The average volume is 23,000 shares, and this is not a big stock. So, yeah.
So
anyways,
it's up 52% on the month.
Yeah. Since ChatGPT recommended it to me,
it's 18 days,
and I didn't. Yeah, ridiculous. Anyways, it's cool there. Intel doing its Intel little thing actually got up into the 50s. I've been talking about that one for weeks. There you go. CoreWeave, obviously, great play. Happy about that one. BW went up 6% this week, but it was up more. I mean, everything last week that I talked about did really well, but you know, that's not an always occurrence. Ones that I am looking for this week, I think CoreWeave is going to continue to go up. I think next 115 is next. I do think at some point 91-ish gets retested, the top of this range back here. So if you didn't get in the first ride, I would wait for 91 again. That's kind of my play there. I think Oracle is getting really enticing. I know that the problem is this one doesn't really excite me because it's going to be wrapped up in that whole OpenAI lawsuit. So that's kind of a bummer. But if you're talking risk to reward, it's it's super good here, right? Like you go boom, boom, inverse head and shoulder. That's, I mean, literally my favorite setup. And then if you go risk to reward here, and you just put your risk as below the lows of, gosh dang it, below the low of Friday, which is not much, right? It's, say you enter, it's probably going to open down is the thing. So this is not really relevant, but
Didn't they have?
like, I would say down
news or
3%.
Didn't they have like a big lawsuit or something happened there?
Yes, but here's the thing: if you believe all gaps get filled, and your risk, you call your risk, here, you risk losing 3% to make 14. That's a 5 risk to reward. It's just really, and that's, I mean, if you zoom out, this is Oracle is sitting where it was pre in 2024, all the pre AI stuff at all. So to me, this one it's super duper risky. So I think it can be a good commons play. I probably wouldn't touch options on this one. Yeah, they're getting sued by bondholders because they apparently, basically committed fraud, and they're saying the bondholders saying that they didn't disclose that they were going to make all this investment in data center. I think that's a foo-foo headline. I think that it's not like that headline doesn't really move the needle for me. The volume was less than it was on the green candles that have had wide spreads. So volume was increasing on Friday. I think it held off support, but everything could gap down on Tuesday. So this one, my Sunday bangers kind of go out the window, because everything that, for me, I like Oracle. I like CoreWeave still on a pullback. Oracle I like just as a buy and the kind of accumulate over time, and then but know that it's not going to just go crazy immediately. That's kind of where I am with those. But that's about it right now. I'm not really looking for anything new. I do think Amazon is kind of ready to get going. Amazon looks great up to 250 again. Again, you just take into account that anything. I think my Sunday banger is just a word of advice to be careful holding anything overnight right now, because it's just going to get moved crazy by headlines. So
yeah, a lot of uncertainty right now.
If you don't know what trade to take next, oftentimes the best one is just sitting on your hands. So
yep,
that's it for me.
That's all I got.
Yeah,
cool. I like that. That was an interesting little episode there. Again, guys, comments. Give us your thoughts. Tell us what subjects you would like to have us maybe touch on. We try to set it up where we do the first 10, 15 minutes talking about something that will help you, whether it's, an indicator and learning anyway. And then the rest of that, we got 15 minutes of nonsense and and then the bangers. I don't know. It's trying to make it fun, trying to make it interesting for everyone. If we want, if the masses say change the format to this, we'd look at it. But a subject you want to talk about, please, please, please bring it up in the comments. Like, subscribe, and what's the other one? Oh, yeah, hit the bell. I don't know. We're not very good at this yet, but
turn your notifications on.
Turn on your notifications. Hit that bell. Slam the like button.
Smash it.
Smash it. Smash it. All right, guys.
Go Bears.
Bears.
Have a great week.